their fiscal year ends in March, so this company is really beyond the end of their fiscal year. They have an enterprise value of 1.74. And if you don't understand these terms that I am saying, please go do your due diligence. On the normal show, I would actually explain to you what these metrics mean. But tonight, because this was a surprise broadcast, you're going to have to look it up for yourself. I could sit up here and give you my best guesstimate or try to explain it off the top of my head. But I'm not a computer and I don't want to make any mistakes. So I encourage you to look up Investopedia or just Google these terms if they're giving you any problems, because I'm not a guru, I'm not a genius. I still have to use notes, and sometimes I still have to research things. If you go to the Pocket Change Investments group, you might actually see a nice little meme I put up about, all the tabs that I have open when I'm actually researching a stock. This is not hard work, but it's not super easy. You got to put your time in when you're trying to figure out the finances or trying to find information about a company, because we live in a digital age and all the information you need is out there. But you have to actually look it up. You have to do the Googling. And if you don't do your Googling, if you don't do your due diligence, if you don't look it up, the person who's giving you the information can tell you anything, and you are more likely to believe it. I am a strong advocate of listening to other people's opinion. I am a strong advocate of letting other people's talk so I can learn what they know. But I still do my due diligence. I still form my own opinion. And as an investor, that skill is very important, because you don't want to just go into a stock or an investment dealing with nothing but your own opinion, because you may overlook something or somebody else may point something out that is really important to the company that you might not know of. You may be able to actually on the internet or, sometimes these television shows, they may have interview with like the CEO or maybe even someone who is very familiar with the industry that the company's in. And their information will be almost as good as the information you would get from the company if the company could talk. But you still got to take that with a grain of salt, because a lot of people have agendas. A lot of people, when they tell you about these financial things, they are approaching them from an optimist standpoint. And the only thing about an optimist is they'll make anything look good. So you got to be very careful with that. I am currently not invested in Sony. I think I was trading in it around March, and I purchased Sony and Nintendo at the same time. It's a really good stock. I really, really love it. Being that the stock is close to its high, I might not invest in it. But just because I don't invest in it, that doesn't mean you shouldn't, because you may be missing upside risk. And the funny thing about risk, when people think about risk, they always think about downside risk. They think about what happened if the stock goes down. Well, when you choose not to invest in a company because the company is doing too well or the stock is too high, you may be cutting yourself short. You may be robbing yourself out of some potential gains, because there is no rule that says this company cannot go up for another 2 weeks just because it's at its 52-week high. Stocks don't reach their 52-week high and automatically drop down. Some do, but that's not the rule, and that's not how the stock market works. So if you are going to invest in this stock, I would say do a little reading, follow your convictions, and just know that you're taking a gamble that the stock could continue to go up, but you're also taking a gamble that the stock could go down. But that's with the same risk you take with any stock. I don't know what it is about when stocks are at their highs or lows, or when stocks are currently dropping or rising, it makes people nervous, because anytime you buy a stock, it doesn't matter which direction that it's moving, it can always turn on a dime and go in the other direction.